Hi, I'm Dominic Picardo here for the July edition of Spreadbet magazine, and today I'm going to take a look at Spain's main stock market index, the IBEX 35. Now, the IBEX is in a very sorry state indeed right now, having plunged in May through its lows of early 2009, and it's now really back at levels last seen some 9 years ago in early 2003. And because of this, it is beginning to attract the attention of bargain hunters, albeit bargain hunters who've got a very strong stomach indeed. For example, this index now has a dividend yield of more than 8%, which is the second highest yield that it's offered in modern memory. And also from a technical point of view, Spanish equities look really oversold right now. This is the monthly relative strength index down here, and as you can see, there have only been two occasions before today in the last 20 years or so when the relative strength index has been as oversold at such extremely low levels as it is today. And on both of those occasions, that oversoldness was followed by a really significant bull market. So one can certainly make a case on both valuation and technical grounds for why the IBEX has the potential to have a major rally. I think today it's priced for some sort of semi-disaster in Europe. And perhaps even for total disaster. I don't see total disaster happening though in the Eurozone. I reckon Spain is going to get bailed out sooner or later. It's in Europe's interest to do so, Germany's interest to do so, and in those of the wider world to do that. Spain gets bailed out, and I think when this becomes apparent and people realise that the Germans are going to bite the bullet and take what action is necessary to prop up Spain and such other nations, then the equities in particular of these battered markets have the potential for a major rally. From a trading perspective, however, I am not sure that the misery of recent months is definitely over. I would like to see the IBEX regain the territory above this red line here, and this is the 21-week exponential moving average. And the significance of that line is, well, if we look back to previous recoveries in this market, a move above this line is one sign that a new bull market is getting underway, or a new significant move higher. It's not fail-safe. I mean, the market can get above that line and then retreat once more. But if it goes above there and then in really strong thrusting style, then I would be very willing to give this sort of move the benefit of the doubt. And that line currently sits at around 2,321. Once above that line, I would then tend to buy this index on the pullbacks. And there's a second line here, this purple one, and this is the 21-day exponential moving average. I mean, that's one of the lines that you could buy pullbacks to after this line after we're above this line, and obviously this line would be above there as well. For now, though, absent a major liquidity drive from the European Central Bank, and really something to help lower Spanish borrowing costs, government having to pay a huge amount of money to borrow money at the moment, my focus remains on further losses, so long as we're below this line, and my bias for now would be trying to open short positions when the index drops through this purple 21-day exponential moving average. But we'll keep an eye on this one in the weeks and months ahead.